Welcome back. We are sticking with results. Bank of Maharashtra has reported practically eye-popping results, actually yet again. And this at a time when banks are fighting for deposits. This bank has reported a marginal rise in their net interest margins to nearly 4%. Accompanied, of course, by impeccable asset quality and good fee income growth, the bank has reported an all-time high return on assets of 1.74%. Joining me now is Mr. Nidhu Saxena, Managing Director, CEO of Bank of Maharashtra. Good morning, Mr. Saxena. Congratulations, great set of numbers. Thank you very much for sparing time for us this morning. Let me first start with the margins. How did you manage to improve margins when the world is fighting with higher cost of funds?
Right. I think rightly the question is quite appropriate. And if we look at the leading brokerages also talking about that, probably the cost of deposits have gone up in the system, and it will impact 2 to 5 basis points on the NIMs, which may see a reduction. But if you look at my profile of business, my cost of deposits have gone up by 37 basis points, but cost of funds have actually gone up only 27 bips. And this is through, we have exercised options of refinance through SIDBI Mudra wherever eligible. We have also seen a good traction in our CASA deposits. So if you see deposit in the overall has grown YOY by 15%, within which CASA has grown by 12%. And above all, to top this is that my yield on advances have actually improved to 9.21 levels. So all these have sustained that I have not been able, I have been able to actually do a NIM which is not lower than what we have done in the last 2 quarters. In fact, 1 bips we have actually improved on a YOY basis. 9 bips improvement in the NIM is there, what we have showcased. Having said that, I'm also mindful that whenever the rate cuts do happen, I have a loan book of 37%, which is linked to repo. So that will see an immediate repricing, and the corresponding deposits will reprice with some lag, as we all know about that. So I'm keeping a conservative margin guidance for me of 3.75 to 3.90 in terms of NIM to be maintained. And although I've been performing much above this guidance in the last 3 quarters, I don't see much of challenge. But with this event likely to happen, I want to remain conservative going ahead.
Okay. Well, I don't know, the event-wise, the rate cut, if anything, is getting pushed by the Reserve Bank after we looked at the last inflation number. But that's another discussion altogether. Let me just dwell on what you spoke in terms of cost of deposits and yield on advances. Your cost of deposits, I'm looking at page 17 and 18 of your investor presentation. Cost of deposits has gone up by about 20 basis points, and yield on advances has gone up by 25 basis points. Okay, I'm only looking at advances and deposits. Now, that can be a bit of a worry, isn't it? Yield on advances going up so much. Where are you lending? One hopes it is not risky lending.
Yeah. In fact, we are very, very quality conscious. Whatever loan book that is getting created, first of all, if you look at my RAM corporate share, currently I am 62-38. So I'm in that space where the margins are higher. Not that corporate we are averse to do. We will definitely not like to miss out on any emerging opportunities in any of the sectors or segments going forward or even now. So currently that high RAM share is sustaining this higher NIM. Also, we are conscious, if you look at my exposure in the AAA category, I've actually reduced my exposure in AAA category, where I have gone below A and above. It is not that I have done any lending in a segment which is not an investment grade. We have just moved away from a space where the margins to earn or nothing is left on table for the banks.
I agree.
And we have, in fact, in the segments of MSME, triple B and above, where we are having sole arrangements, we are also planning and we are actually turnaround time in conveying decisions from the bank has been expedited, and I am able to charge a premium to this through my efficient working, and customers are happy to pay that. So that's how we are seeing that whatever segment we are entering and taking exposures, quality is the first and foremost requirement for me. Beyond that, maybe if we can earn better margins through negotiations, through my better delivery, I'll do that.
Okay. No, I actually was coming to exactly that point, and now I'm looking at page 23 of your investor presentation, where you have given us the rating bond-wise, percentage investments. Your AAA investments have gone down from 8% of your outstandings to, from your 6% of your outstandings to 4% of outstandings, whereas the exposure to AA has gone up from 31 to 34. Exposure to A has gone up from 23 to 24. Exposure to BBB remains steady at 14. But it has gone up year on year from 11 to 14. Are you sure? Because BBB, when you go, there would be a little of a worry. Are you sure that you will be able to maintain this asset quality?
So, as I said, the data that you just shared proves the point and doesn't require me to say anything more. But we are building a loan book, and we are very conscious about the quality. And even in the RAM segment, I am actually not underwriting below a certain benchmark. I am even contemplating to improve the benchmark. Today, I am growing at a very fast rate, which is high double digits of 22 plus. And I don't mind shedding off 1 or 2% here there.
Got it.
Still, I'll be growing the fastest in the industry. So, but I'm completely quality conscious. But yes, we want to do a business. We want to be present where something remains to the bank on the table. We should have some earnings also. Top line alone is not sufficient for me.
No, I agree with you. Actually, your slippages are up 2%. So, I mean, there are no doubts on your quality as of now. I was just looking at the bond exposures. Now, if your quality is so steady and good and net NPA is down to 0.2%, why are you providing? Why this 825 crores? And last quarter, it was another 900 crores. Where is this 1700 crores just going into contingencies? Is it floating provisions?
So, see, to maintain that NNP of 0.2%, today, whatever slippages I encounter, slippages are bound to happen. So, beyond the IRAC norms, I am providing completely 100% for the fresh slippages also, just to maintain that 0.2 to 0.25 range of guidance that I have kept for NNPA. So, it is that kind of provisioning that we are doing. And yes, couple of things, we are having accelerated provisions for ECL, and which time to time I'm actually already started build up on those fronts to provide whenever the guidelines are going to come. I would have done something already in the balance sheet to cover that requirement.
Okay. Actually, how long do you have these tax advantages? I mean, you're paying peanuts as taxes, 53 crore because of your netting off the DTA. How long do you pay such low taxes?
So that advantage is going to be there definitely for this FY, and I would say in the next FY also 25-26 for the half of the financial year, I will continue to get this advantage of setting off against accumulated losses.
Okay, that's excellent. But I'm running out of time. I have to push this question in. You know, at 1.74, your ROA is comparable to some of the best private sector banks. It's a very good set of numbers. Would you consider rebranding your bank? Now you have got QIP money also. I mean, call it Maha Bank, but I don't know what. Just to appeal to the next Gen Z. Are you planning any rebranding? You know, like Ratnakar Bank became RBL. Are you planning something like that?
Right. So, yes, I think not very consciously, we have not gone to board to do, but if you granularly see a lot of activities that we have done around our products, around our as basics as the account essentials. Today, I have a rebranded, debit card. I have a rebranded passbook. We have adopted metal card for our premium customers. premium branches where we are supplying those kind of materials. So we can always look at this option. I want to be present to the sectors, the segments where the growth is happening. And definitely we would not like to miss on the young segment, which holds a lot of promise for future as well. And to address them, I need to upgrade on my technology. I am working on revamping my entire mobile banking app, and that new lifestyle option will be available to me by end of this December. So a lot of rebranding through that is going to happen. And we did celebrate our 90 years of foundation last month.
Yeah.
And we have done a lot of activities around our what is the aspiration, because so far we have been, the good part is we have been performing on a very consistent scale for last 30 to 15 quarters, and this quarter particularly has been also exceptionally good, I should say. But I have my own aspirations, because as of now we've been operating on a smaller scale. So we want to become a bank of greater significance. We have our aspirations to go in the PSB space, say 1 or 2 notches in the next 2 to 3 years. And to do that, a lot of initiatives we are taking around products, processes, use of technology to reach out to clients and so on.
Now, I will want another chat with you out of time today because it's result season. We will want a more relaxed chat on all these issues. You know, Bob went to Bob World and SBI went to Yono. So perhaps some rebranding is on the cards for you as well. All those questions for a later time. Many congratulations for these results. And thank you very much for joining us. We have to wrap up on Bazaar. On that note, Chartbusters come.